All right, Bulls and Bears, what's happening? Hope you're doing well. We're back with another dose here, folks. A lot of information, news, and topics to get into today. We've got the inflation numbers out. We're going to talk about what's really behind them and what they really mean. We've got predictions of a massive collapse with 6 million plus jobs likely to be lost based on if something happens. We'll talk about that here in just a little bit. And then we have other predictions that everything's going to boom. Everyone's going to be rich, which is a joke. Folks, things are about ready to get worse if you ask me. And believe me, I hope I'm wrong. I don't come on here predicting negative things or forecasting negative things to try to create some negativity. Because typically people don't like to watch negative information. But when it's obviously the truth and obviously real and people can feel what you're saying and they can feel what's going on within their own household, within their own budgets, then people understand, right? It's not just somebody being negative all the time. I'm kind of a half glass full type of person. If you ask people around me, my family, my friends, pretty positive guy. But I see a lot of things, a lot of deceptions happening right now, and a lot of things that I think are very, very concerning with what's coming up here, not just with the economy, but with the entire standard of living, with society. But let's start right here. Report here: economy to lose nearly 6 million American jobs, 1.1 trillion in GDP if they let the 2017 tax cuts expire. Now remember, those are the tax cuts that were implemented by the incoming administration, the one that's going to take over here in just a few days. They were focused, highlighted being corporate tax cuts. That was the meat of the bill. Now there was some other cuts to individuals and different filing changes, but the overall big picture and the talking point was everyone's going to be wealthier and the working class, the middle class is going to be much better because of the corporate tax cuts, trying to convince you that companies saving money in taxes was going to trickle down to the worker. All right. So wages did go up, but not enough to meet inflation, not to meet the cost of living. Wages didn't go up enough. Therefore, you saw debt explode. Of course, people had to go into debt just to survive. And that would be most people, not everybody. Obviously, nothing is 100%. Nothing is completely black or white. But for the most part, wages didn't keep up. And the belief, again, that tax cuts with these corporations are going to trickle down, it's just not true. What you saw was record CEO bonuses, record stock buybacks, folks. There's a lot of things they do with this money. You think they're going to be making more money and saying, oh, let's pass this out evenly across the entire workforce? No, the people at the top make a lot more. They buy back their own stock again, and some of them will expand and open up new locations and things like that. They use it for expansion, which does create jobs. But are the jobs that are created enough to keep up with the high cost of living? So I think the tax cuts were a failure, if you ask me. Is it less bad than it is, or than it has been the last 4 years? Sure, it was a little less bad. But I think the next 4 years, we're going to look back and say, wow, wasn't so bad under this past 4 years. And again, I hope I'm wrong, but this is what I see on this. I mean, let me know if I'm wrong. If you believe in the trickle-down thing where corporations save money on taxes, they're going to pass it down to all the workers, tell me where I'm wrong. But I think most of you, probably 99.9% of you, say, yeah, that sounds about right. And speaking of the cost of living, let's talk about the recent inflation numbers. They're out from December, and consumer prices are up 2.9%. Now, the stock market went up. I believe that Dow Jones was over 700 points based on this positive news. And I'm doing quotations for those of you not watching the video that are just listening. 2.9%. Folks, that is a number that's higher than last year. That means prices are higher than last year. And last year's were higher than the year before. And the year before was higher than the year before that. Right? So this is cumulative, folks. And just because inflation is less than what it was when it was awful, even the official number was 7, 8, 9% at the worst, when really it was 10, 15, 20%. But just because it's less worse than before doesn't mean it's good, folks. People that can't get by now, they're having an even harder time versus last year, 2.9%. But they're looking at that as a positive number. I mean, it's the same story over and over again. Here's how they're putting it out here in NPR. That's substantially lower than the 4-decade high of 9.1% that the U.S. hit in mid-2022, right? So comparing a car accident, comparing a car accident where only 2 people pass away versus a car accident where 4 people passed away, saying the 2 people passing away accident is good. Wow, it's great. Only 2 people passed away. No, 2 people passed away. It's not good. Car accidents are never good. Folks, this economy, this inflation is a car accident. It's not as many people passing away as the accident that happened previously, but it's still pretty bad. People are still getting crushed under this cost of living, under inflation. So you guys get my analogy there. I think most of you, again, probably 99.9% are probably saying, yeah, sounds about exactly right. And there's still a fraction, a few people out there that say I'm wrong, but it's getting less and less as this continues. And we warned everybody about the things that are happening today many, many years ago. And one of the things that's very interesting is I used to get a lot of emails about the housing market. People used to reach out to me about the housing market saying that it's all about mortgage rates, that once mortgage rates go up, the housing market's done. It's finished. Making it sound very simple, making it sound like it's just based on mortgage rates. Folks, that's part of it. It's a good part of it, but it's not the whole thing. Obviously, we didn't see the housing bubble go bust, even when rates doubled. Remember when they were down around 3%, and now we're up over 7%. So they've more than doubled when you look at the lows versus the highs here just in the past 5 to 10 years. Bubble didn't go bust, folks. I had people swearing that as soon as interest rates, or as soon as mortgage rates rather, rose, that the market was done. Didn't happen, folks. That's because we have entities out there that create money out of thin air, buying up a bulk of the mortgages. We have 1 in 3 homes across the U.S. being bought by investors, many of them mega billion-dollar companies, keeping prices high and outbidding the average Joe or Jane working person that just wants to buy a home to live in. That continues, and until those things are addressed, the government buying most of the mortgages right now with the non-bank lenders and the corporate investors coming in and buying these homes, the bubble will not go bust. All right, combine that with just the lending that continues to go on out of these banks, even with record unrealized losses at the banks right now because of the corporate loans, the underwater loans. Banks are still making more loans, right? This wouldn't have happened in 2008 when banks were teetering on failure, before they were given a lifetime get out of jail free card, or before they were promised a lifetime support or life raft. That would have never happened back then, folks. So this is what's happening now. Until this changes, and it's more than just mortgage rates, until the big picture changes with how the money is just endless, right? We're talking about digits on a screen. It's no longer tied to any weight of gold like it used to be back in before 1971. And I have to repeat that every now and then because most people I think understand that, but there's still a few people that say, what are you talking about? We don't understand what you mean by creating money, folks. It's just digits on the screen. It's no longer something that has any limitations to it. Back when it was tied to gold, then you couldn't just have endless amounts of money thrown at the housing market, stimulus checks, endless money to other countries for wars, quote unquote, defense spending. This wouldn't have happened under the pre-1971 way of money, right? So this is what it's all based on. This is the underlying foundation of all this here. So no, bubbles don't have to go bust. Bubbles can remain inflated and continue to be inflated higher. All right. Now we are seeing some corrections. Housing a little bit, and rents is coming down. Overall, we're down close to about a 3-year low, 2.5 to 3-year low in rents now, which is not much because just because it's lower, the lowest in 3 years, doesn't mean it's much different because it's only down about, I think, 1 to 2% nationwide. But if you look at certain places, California is in big trouble with rents, the cost of living, and with 12,000 plus homes being just wiped out by these fires, rents are exploding, not just in LA, but we have a lot of people moving out of LA, people coming down to San Diego, where I'm at, and within 100, 200 mile radius, some people even moving out of state. They say we've had enough. They're going to try to get insurance money and move out of state to someplace cheaper. I don't blame them. I might do the same thing, even without a fire. I might do the same thing at some point. If the cost don't get much better, if the cost of living doesn't get much easier, after my kids are out of school. That's the big thing, right? And I've heard some influencers out there, some YouTubers out there saying they're leaving California for years, right? Some of you know probably a few people that I'm talking about. Even people with no kids, no family, they swear they're going to leave, but relocating is not easy, even as a single person. Well, it can be if you have a very low, convenient, what's the word I'm looking for? If you have a very, I think the phrase I might be looking for is low maintenance. I mean, let me know down in the comments. If you have a minimal amount of stuff, basically, you're packing light, so to speak, sometimes it can be very easy to relocate. I remember before I had a family, I moved over to Tucson, Arizona for a job, came back to San Diego. Prior to that, I had relocated from Michigan. That was an easy move. Everything I owned, I put in a van, bought a van just for the trip, and I ended up selling the van out here once I got here. Actually lived in the van for a while, not just when I was on the road, but when I first got into San Diego. The point is, if you pack light, you can move pretty easily. But once you introduce a family or a lot of stuff, and then the whole social network that comes with having a family, it's not so easy. But yeah, California's in big trouble. Rent's going down overall, slightly nationwide, but rising here in California. Before this, though, it was a slight dip, but now I think rents are really going to rise, not just in LA, but all these people coming out of LA. Just think about 12,000 homes with the average household number of people, 3 to 4 people. You're talking about 40, 50,000 people all at once looking for a place to rent. But also back to that 2.9% December inflation number, the CPI, it's the third consecutive month in which it has slowly ticked higher. So higher than the previous month, but just because it's lower than the year before, or just because it didn't go up as much as the year before, they're trying to say that's positive news. Again, stock market up on that, but it's creeping higher, folks. And with the recent events, I think it's going to be more inflationary than it's going to be deflationary. Now, again, we've got the new administration coming in, talking a big game, making a lot of promises, and we're going to see how it plays out here. We don't have much longer to wait. And they're saying on day one, they're going to implement a lot of things that are going to really drastically change things, like bringing on or reactivating a bunch of oil rigs and more, what do they say, pump or something like that. What's the phrase they're using? Drill. They're trying to say that's going to be dropping gas prices. We'll have to see. And again, I hope gas prices do come down. Even if they do, that's just part of the big overall puzzle that people have to contend with. All right, let's talk about banks in a little bit more depth here. Big earnings report. Goldman Sachs, JP Morgan, crush earnings in slew of, well, their stocks crushed in slew of big earnings. The fourth quarter earnings season kicked into high gear Wednesday as Chase, BlackRock, Goldman Sachs delivered earnings beats. Wells Fargo reported mixed results. Citigroup topped views and announced $20 billion stock buyback. What we were just talking about at the beginning. What do these banks do? What do these companies do when they make more profits? It's more stock buybacks, folks, because the largest holders of the stock are the CEO, are the people at the top. And a lot of them not just are holding the stock, they get paid in stock. So naturally, they're going to want to buy back as much stock as possible. So there you go. There's more evidence. And this is out of investors.com. There's more evidence that the money doesn't trickle down. There's people out there still believing trickle down economics, that the more money you save the people at the top, that it's going to get down to the people on the ground level or the frontline workers, the actual people doing the boots on the ground type of work. And I wish that was true. If that was true, then all you'd have to do is cut taxes and everything would be peachy. And we have Chase out there, JP Morgan Chase, reporting earnings of $4.81 per share, beating the fact sheet view for a 35% increase to $4.09 per share. Reported revenue increased to $42.77 billion per share, also clearing views for about 9% growth. So both beats with JP Morgan Chase. Now, something very interesting, further pointing to a very slowing economy, is out of the journal here, the Wall Street Journal. And we've got this. Even Harvard MBAs are struggling to land jobs. The latest crop of elite business school graduates are taking months to find new jobs. And what we've been seeing is a lot of white collar jobs being cut. And it's almost looking like the AI that's coming in and replacing some of the workforce is affecting people at the top very heavily. And I don't think they expected that. I think what their goal is to try to eliminate the frontline workforce and the people interacting with customers. But it's not that easy when people want to speak with other people, for example, at the job. They don't like an AI or an algorithm or a robot trying to figure out the solution to their problem. For example, when you're online at a website, maybe it's a commerce website or something, or some other website, maybe insurance, and you need help, when you click that little chat button or chat icon or the little bubble where you get help, it's usually, first, it'll be an AI type of system that tries to respond to your question, right? Kind of like those automated menus when you call someplace, they're trying to figure out what you're saying, and you're like, no, no, no. You have to repeat it over and over. And then once that fails a few times, then they finally may get you through to a live person. But it looks like it's actually affecting the people at the top and some of these white collar workers. Let's talk about TikTok, folks. We're preparing for a TikTok ban. And as soon as this upcoming Sunday, and what's Sunday going to be here? My calendar's not working. So today's the 15th season. Is that the 19th? Yeah. So as soon as the 19th, TikTok could be shut down. Now, some people out there say it's just a bunch of dance videos. It's just mindless entertainment. It's worthless. There's a lot of people, a lot of businesses reporting that TikTok has helped them tremendously. Now, a lot of people, just influencers, are making money on TikTok just like they are YouTube. But a lot of businesses say that they put out videos, and sometimes it'll be something like they're repainting the front of their restaurant. So they put it out there in kind of a time lapse type of thing. I saw some, I think a Chinese restaurant here in San Diego that said they had a big surge in business after putting out that particular video. And some of them do put out silly videos, but they attract customers. But I don't think if it does shut down, it's going to be something that's going to crash the economy. I think a lot of people will probably just come over to YouTube, and you'll see a big increase in YouTube traffic. But we'll see how it goes, and we'll see if the shutdown even happens with TikTok. Now, let's jump over to the Brics countries and what Goldman Sachs is saying. Goldman Sachs is out there saying a U.S. Brics standoff could send oil prices skyrocketing. So basically what we have right now is we have the Brics countries out there, most of them saying they're turning away from the dollar, trading outside of the dollar. But we have the new administration coming in saying, hey, you better not do that. Otherwise, it's going to be 100% tariffs. And the tariffs are going to be inflationary for U.S. consumers. Again, some of you disagree with me. We're going to find out here shortly who's right. And they're basically saying this standoff could create skyrocketing oil prices because some of the biggest oil producing countries in the world are part of the Brics alliance. With both the Brics Economic Alliance and U.S. engaged in a standoff, Goldman Sachs has warned that the tensions could send oil prices exploding higher. Indeed, the sanctions and de-dollarization efforts could erupt into greater economic problems on a global scale. So not too much longer, folks. We're going to see how this plays out, and we'll see if I'm right or not. It's going to be very interesting, though, to watch and see what happens. And let's talk a little bit more about tariffs here and how it affects jobs and the cost of living. Remember, starting in 2016 with the administration that's incoming now, the 4 years under this administration, we saw a lot of jobs move from China to Mexico, basically moving out of China to skate around some of the tariffs. But Mexico saw a big boom in manufacturing. A lot of companies opened up shop in Mexico, and this is being reported. Even NBC's talking about this. One of the top priorities next week will be to impose steep tariffs on Chinese imports, a move that they're saying would protect American jobs and bolster domestic manufacturing. But if previous trends are an indicator, the biggest beneficiary may be Mexico. So not bringing jobs back to the U.S., but just moving somewhere else where the tariffs aren't as bad. Because, again, the cost of living here in the U.S., I have to come back to this, companies are going to look to get out of America, not come to America, even with steep tariffs. And just because you tariff one country doesn't mean they're going to choose the U.S. to come back. There's many other countries they can open up shop in where the cost of living is cheaper and you don't have people demanding higher wages like the U.S., the country with the most amount of people going on strike and demanding higher wages is the U.S. because the cost of living here, for lack of a better term, it sucks. And people aren't making enough to keep up. And again, people think trickle-down economics and tax cuts for the rich is going to help people. If that were the case, then we would have saw, much better times even 8 years ago, starting 8 years ago. But now Mexico is going to be seeing a lot of jobs coming back to that country, but not the U.S., I'm afraid to say. And again, I hope I'm wrong. Let me know if I'm wrong. I love to hear people tell me why I'm wrong, but don't just say I'm wrong. Tell me why. Give me bullet points. Like I talk here for 10, 20 minutes, with real data, real facts about recent history and just logic. So let me know down below. I mean, a lot of you are smart, and I would love to hear why I'm wrong, because it would maybe instead of glass half full, I would be 3/4 glass full. If you give me some good news down below in comments, give me that good news, people. Keep stacking. Thanks for watching this. Make sure you subscribe. We'll talk to everybody very soon. Big love. Bye for now. Peace.